Hey everyone, and welcome back to another portfolio update for you today. So over the past week, the couch investing portfolio was up just over 1%, whereas the S&P was up 0.34%. Year to date, we're up 59.73%, where the S&P is up 17%. And since the start, we are still up 155%, whereas the S&P is up 38%. And so in today's video, we're going to talk about the upcoming Fed meeting, probabilities of a rate cut, go over the upcoming earnings week, talk about the recent moves I made in the portfolio and outside. And then as always, we've got some market data to look at, some very interesting ones as well. So stick around for that. And yes, we will talk a little bit more about the Netflix Warner Bros. Acquisition, talk specifically about Rubrik because they reported their quarterly figures. Stock was up over 20%. Very happy with how that has worked out. So we're going to have to talk about that. A little bit more, of course, on a Shift 4, SoFi, and then, of course, a little bit on PayPal. And then we'll talk a little bit more about the bull bear case at the moment. And then, of course, at the end, we have the sports section. So we'll have something to talk about. All right, let's start off with the upcoming earnings week. Monday, Tuesday, pretty quiet day. Maybe if you're in GameStop still, well, they report Tuesday after the market closes. AeroVironment also reports after the market closes on Tuesday. But then on Wednesday, specifically after the market closes, we do have Oracle, Adobe, Synopsys. Some of you also own a Planet Labs, that is. So Wednesday after the market closes, that's definitely an interesting one. Thursday before the open, you have Manchester United. They're yet to play their game. We'll see what happens on Monday, but on Thursday before the market opens, they are reporting their quarterly losses because they are a club that collects Ls. Then Thursday after the close, Broadcom, Lululemon, and Costco. So I would say, well, for me specifically, Oracle, Adobe, Broadcom, maybe Costco, just to see what's going on, are the ones where I will be paying attention to. Then as for the moves outside of the portfolio, nothing has changed with regards to Pagaya. And like I said in the, midweek video, I did add 50 shares of Iron. And so now I have 550 shares of Iron. I'm still up 90% on the whole position. My average sits at $23.50. And I don't think I will be adding any more anytime soon. As for CoreWeave and the PayPal option, so for CoreWeave, I'm now down 1.86%. My average sits at $89.94. As for the PayPal options, I'm of course still in the red on all of them. The most on the ones for March. Yes, I'm still keeping those for now. It could have been much better if CFO Jamie Miller decided to be a bit more optimistic about the company's future, but that didn't happen midweek during the UBS conference. But I will talk a little bit more about that later in the specific PayPal segment. But all in all, I'm still holding, of course, the June ones and all of the 2027 ones. I think I'll do very well with those. I do still have more than a year with those 2027 options. June, still 2 quarters to go, probably another 2 rate cuts. The March ones are the ones where I'll probably lose money, but we'll see how much of a hit I'll take. Then moving on to some market data. So this is what happened to the S&P 500 after equity put to call ratio was under 0.44. A week later, 75% of the time we were red. So here in this case, if we only had this, would not be that great in the short term. Then remember, we talked about this like breadth trust indicator that did not get triggered on a Friday, unfortunately. But then again, even the almost scenario is still good enough for us. Because as you can see, a week later, 2 weeks later, a month, all the way to a year later, the probability of the S&P being green in the case that we just had, well, it is quite high. Almost on all of them, it's 100%. Only in 2 cases is 80% of the time we were green, but on average, we are going to be up, or at least that's what happened in the past. Then looking at what has happened with the S&P 500 after AAII bears is under 31%. That's looking at the bearish sentiment. So under 31% for the first time in over 30 weeks. We don't really have that much data to work with. But the data that we do have indicates that, well, again, probabilities are in our favor to and green, especially 2 months to a year later. And this is data that we got on Thursday. Then looking at the percent of stocks with a MACD buy signal has crossed here 33%, in this case 33.4%. Usually what happens next, well, is we continue to go up. Looking at what has happened with the S&P 500 when University of Michigan consumer sentiment is below 56, we have, well, not the most data to work with, but I think it's enough. You can see that 10 months to a year later, 100% of the time we are green, and even 6 months later, it's 88% of the time. On average, we're going to be up, whether it's 1 month, 2 months, 3 months, 6 months, 8, 10 months, or a year later. Then looking at the NASDAQ, when a percent of stocks is above the 10-day moving average cycles from below 20 to over 75 in 10 days. So that's 20% to 75% within 10 days. And this is also data that we got December 4th, so Thursday. And here you can see that 3 months later, 100% of the time we are green. But 2 months later and a month later, that sits at 91% of the time. A week later, only 64, same thing with 2 weeks later. And then the last one here, this is data we got on Wednesday. So if you look at 1 week later, it's going to be next Wednesday. NASDAQ 100 after 8 consecutive days of the close being higher than the open. We can here see, so if we look at, let's say, a week from now, 76% chance that the upcoming Wednesday, we are going to be green. If you look at a month from now, that's only 64% of the time we were green, then 67 for 2 months and 3 months. And then if you look at, let's say, 9 months to a year later, 91% of the time, we ended up green, and on average, we are up substantially. Now, as you know, just because something has happened before does not mean that it will happen again this time, because this time there are a lot of other things going on, right? We have rate cuts, we have a change of a Fed chair, we also have AI that's playing a big part here, huge build out, huge capex cycles, etc., etc. But again, every single week I see the same comments, I see very, very positive comments, some comments that question this data. There's really nothing to question. You just, if you want to use that data to your advantage or just for general knowledge, do so. Again, this is not a crystal ball type of thing. This is just seeing what has happened before, and maybe this might help you make some moves. Maybe you might want to sell some stocks, maybe take some profits, or maybe buy more. It's up to you. I'm just here each and every week showing you the data, the things that have happened before, the probabilities, and then of course add some context if I can. Then quickly touching on the huge, of course, acquisition that of course has not passed just yet. We'll see if it does, if regulators do allow this to happen. They think it will be between 12 to 18 months until the acquisition will close. To me, it's bullish. Netflix, as I've said before, I think Netflix is a buy at around or under $100. Whether or not it passes remains to be seen. I honestly don't see why it shouldn't, but if it doesn't, then yes, Netflix will pay billions of dollars in fines, but at least it blocks others, such as Paramount, to buy Warner Brothers for at least another 2 years. Now, for the people that complain, whether it's online or in real life, but mostly online, which I still think that most of the complaints or trends online, I still believe most of them are bots. Because remember, delete Facebook, delete or cancel Netflix 5 years ago, 10 years ago. What happened? Well, Facebook or Meta and Netflix, they became bigger and bigger. Right now, people are complaining, oh, this will be the end of cinema, this will be the end of theaters, etc., etc. Well, first of all, Netflix or HBO or Paramount or Disney Plus or Apple TV, etc., etc., aren't blocking you from going to watch movies in the theaters. Netflix actually said that they are going to continue to release movies in the theaters, in the cinema. So it's up to you to go and spend an enormous amount of money for one movie, one night, one Coke, one big popcorn, right? That's costing you probably, what, 2 months of Netflix subscriptions, maybe 3 months of a Netflix subscription to go watch one movie. I think that's the big problem right now. Because Me personally, I used to go quite a lot to the cinema. Well, I used to go quite a lot because there used to be quite a lot of good movies that came out that were worth it to go and spend that amount of money in the theaters. But if you ask me honestly today, no. Yes, I'm going to go watch the next Christopher Nolan movie. Yes, I'm probably also going to go watch the upcoming Avatar movie because, yes, those are probably movies that are worth going to the cinemas. But it is very expensive. I think that's the bigger issue. One ticket plus, yes, popcorn and a drink is going to cost you, I would probably say what, $30, maybe sometimes $40, depending on where you are. It's quite a lot of money, no, for just one movie. Again, that is 2 months, 3 months of Netflix, 2-3 months of Netflix, or one movie night. I guess a lot of people just go with Netflix. And then again, when we have these discussions of subjective opinions, and I'm not just talking here about Netflix, I'm talking here about the whole social media aspect, the whole trending thing. To make something trend, it's very easy to manipulate it. And so just look at the data. Are more people watching Netflix today than before? Yes. Are more people streaming today than before? Yes. So on the one side, you have people complaining about, oh, streaming is destroying cinemas and theatrical releases, etc., etc. But on the other side, the data suggests that a lot of people just prefer to pay for a streaming subscription. That's it. If you really, really, really don't want to see theatrical releases being destroyed, cinema being destroyed, then go spend your money and watch a movie in the cinemas. Because from my experience, I see always fewer and fewer people go to the cinemas. Moving on to the portfolio. So I did make 2 moves. This week I did just buy more shares. I bought more shares of Oscar and I bought more shares of Shift 4. Now, let's start from the beginning. SoFi is still number 1. I will touch on SoFi yet again in a bit after we're done with this overview. So SoFi number 1, Google number 2, Nebius 3, Rocket Lab 4, AMD 5, Micron 6, dLocal 7. Then we have Uber, Meta, Alibaba, Rubrik, Oscar, Shift 4, cash position, still some shares of PayPal, Duolingo, Appcelera, a couple of shares of Nvidia, and 1 share here of Palantir. Now, like I said, I did buy 20 extra shares of a Shift 4, which is a 12.5% increase at $69. Said I'd take more shares under $70 because, yes, my average is a bit higher than that at 76. And then at the start of the week, I did accumulate a little bit more shares here of Oscar, held just under $17. Now, me personally, unless something crazy changes over the next couple of weeks, FOMC meeting, rate cut, dovish tone, no dovish tone, remains to be seen. We still have some CPI, PPI data coming out. Unless I see something crazy, I'm probably done with my buying this year. Why is that? Because I do feel that I've made all of the necessary moves for the year and in preparation of 2026, of course. Do I think that I can take some profits from Micron? Maybe. Yeah, maybe so. I'm definitely not going to add more for Micron or Google or AMD or these types of names. And again, unless we see a big overreaction in the market. But for me, I'm okay with this going into 2026. Some might say that my position for Rubrik or Oscar or Shift 4 is still too small, but remember, I'm, first of all, Oscar and Shift 4, I'm still a bit in the red with those. So once those start to move, the position naturally will become bigger as a percent of the overall portfolio. With regards to Rubrik, after the earnings reaction, we are now positive on that position. And here as well, I am happy that I've accumulated more shares along the way. These are all positions worth more than $12,000, $13,000 already, and they barely moved. And so I do expect them to become bigger and bigger as time goes by. And this brings me to the bull versus bear case right now. Yes, Tom Lee is for some a forever bull, which is fine. I'd rather be a forever bull than a forever bear like a Michael Burry, for example. But me personally, do I think that we're going to close at this level or that Bitcoin reaches 100K again, end of December, end of January, or new all-time highs? Honestly, I don't know and I don't care. That's the thing. A lot of people just focus too much every single time on what the markets are doing, I focus on what specific companies are doing and what specific companies are telling me, because I'm buying companies, I'm not buying the whole market. Yes, it's true that when the market drops, usually the companies, they do drop even more than that, especially high beta names. And that's fine. Do I think that we can end this year higher? Of course, I think so. I think we're going to get a rate cut. I mean, chances of it do sit at 86.2%. So I do think a 25 basis points rate cut is going to happen. But what will move the market is probably CPI, PPI report, and comments from Jerome Powell, and then whether or not we're getting the official announcement of the next Fed chair this year or at the start of 2026. Yes, I do also think that that can play a part here. But yes, next week I'm expecting a rate cut, 25 basis points. But what will Jerome Powell say on employment, jobs market, inflation remains to be seen. And that's why I'm now in a, let's say, stage where, okay, whatever happens, but I'm done buying as of right now. Then if we go and talk about specific companies, in this case Rubrik, they reported double beat and a raise as expected, so revenue up 48% year over year, subscription ARR up 34% year over year. Non-GAAP net income was actually not a loss, which I was surprised by. I like to see that. Free cash flow $76.9 million. Non-GAAP gross margin also expanded here, 82.8%. They have 2,638 customers with an ARR of above $100,000. That is increasing 27% year over year. Then with regards to the business itself, it saw some good wins during the quarter, some good announcements across the board, whether it's cyber resilience, identity resilience, cloud resilience, and more specifically here talking about Rubrik Agent Cloud. This is a company that is doing exactly what it should be doing. Like I said, cybersecurity names are not cheap. I don't think we've found, maybe an Okta or a Fortinet, but across the board, they're always trading at a premium. I do think that Rubrik deserves that premium, especially if they continue to execute like this. Now, the company did already give us some fiscal year 27 outlook, and there is going to be a headwind, but a headwind with regards to revenue growth, but not ARR growth. Why is there a revenue growth headwind? Well, purely because in 2026 or fiscal 26, there was a tailwind. There was a tailwind in the revenue that could be recognized because of the cloud transformation. And of course, that's only a one-time thing. And so next year, that tailwind is going to turn into a headwind. But the real growth here, which will be seen in subscription ARR, is the most important metric here. And that's still expected to do quite well. And so if you want to think about it as fiscal 2028 being the year where you're going to see growth again being normal and actually quite high. And so this is basically the overview of Rubrik. This was again a very good quarter by the company, and I do expect them to continue to execute quite well. Moving on to Shift4. So you might have seen that they've raised another 434 million euros. Senior notes due 2033 with a 5.5% interest. Now, again, this is senior notes, and by the way, those were priced at 102.5%. And so yes, investors were willing to pay a premium for those. Now, these are senior notes. These will not dilute existing shareholders. Now, why did they do it? Well, replacing dirty debt with clean debt, basically retiring debt that might have cost them too much money or dilute shareholders. The company also said that they're on track to achieve their adjusted free cash flow goals of over $1 billion exit rate fiscal 27. And then moving on to SoFi. So of course, SoFi raised $1.5 billion. The pros and cons were already discussed in a specific video this week. And I know some people think, oh, Anthony Noto lied. Well, by the way, Anthony Noto didn't speak this week. It was the CFO, didn't really lie. They said they don't need to. Not needing means if they see the opportunity, they're going to take that opportunity. It's true that they don't need it because the balance sheet looks quite strong. They don't need to raise money. Remember, back in July, they did the exact same thing. They reported, stock went up, and then they raised money. Everybody was freaking out. But what happened the next day? Well, the next day, what did we get? A lot of price target upgrades, and actually, we saw the stock recover quite rapidly. And so I want to remind everyone here again, the last time SoFi diluted shareholders, that actually increased earnings per share, which is a good thing. You would like them to do the exact same thing if it's possible. If you don't trust Noto to do the right thing after all the triple beats, then maybe yes, you should be selling your shares and move on. Friendly reminder that Noto has more to lose than any of you and I if SoFi doesn't get to $35 and $45 when it should. He's building a $100 billion company, over a $100 billion company if you ask me, and should not be focused on short-term options or any short-term price action. And shall I remind you what the CFO said this week during the UBS conference? The capital raise that we did after our last earnings call was purely opportunistic and provides us with a lot of flexibility and optionality to grow the business, both organically and inorganically, and provides just a lot of optionality for us. We're happy with the pace of growth that we have been seeing recently. We would expect heading forward that we would grow the balance sheet at a good pace, and will provide more guidance on what we expect that to be coming out of Q4. But again, this is a great optionality for us. Again, optionality for them, which is exactly what they're doing right now. Then he was asked about potential M&As. Like you said, our capital levels at 20% provides us with significant optionality to explore both inorganic and organic opportunities. We look at a number of assets every single day. There's nothing imminent at this point of time, but we have a ton of optionality, particularly as we're heading into 2026. So again, to me, this points to them seeing something interesting and them acting on it. Plain and simple. When was the last time they disappointed us? I can't remember, because it's been triple beats across the board every single quarter for many, many quarters already. Lastly, talking about disappointments is of course PayPal. We talked a little bit about that already, during the week. These were the highlights of the Black Friday Cyber Monday data. Unfortunately, we did not get any extra information during the CFO's talk, also at the UBS conference. Now, I've shown you this before. You can see here two, let's say, pillars where things are going the right way for PayPal, but unfortunately the third one right here, that's the whole focus, not just by the market, because you could say, okay, the market is stupid, they're only focusing on the bad thing. But no, management is also only focused on this, it seems. They're focused on Q4 branded checkout growth to be quite low compared to Q3. They've been focusing a lot on, well, macro pressure, consumer sentiment being worse than expected or continues to be weak, etc., etc. They've also, well, they talked about 2026 EPS and margin growth, but that also means that they're just going to invest in the business because they are seeing some opportunities to grow even faster. But again, to me, this is a messaging issue, not really a business issue right now. Yes, it's true that some of the things here are slower than expected. It's more on how bad the previous management has, well, managed this company, and a bit less on what Alex, Chris, and the team has been doing for the last 2 years. But I would like to see, again, accelerated buybacks. I think the dividend was BS. I think they should have used that money to buy back way more shares. But we'll see. The last 2-3 days or so were okay with regards to PayPal stock price. And then lastly, the sports section, I think the favorite part for a lot of you. So, Aston Villa Arsenal. Aston Villa with a huge comeback here. Good evening, everyone. Buen dia. Scored the last minute winner for Aston Villa. By the way, Aston Villa, what a comeback. Started the season with what? Barely 3 points after 5 games. Couldn't score a goal. And right now they sit 3 points from the top. Unai Emery, you got my respect. Moving on to the other disappointment, which is Chelsea. Chelsea did not score again against Bournemouth, 0-0. Quite a boring game, to be honest. Another clean sheet for Rob Sanchez, so I'm happy for him because he's been quite good this season. But yeah, to me, it's 2 points that have been lost. Then Liverpool, their struggles continue. They have some issues now with Mo Salah as well. I think that's quite strange if you ask me. The guy signed a new contract last year, scored goals left, right, and center, and this season, for some reason, it doesn't work. It doesn't work. 3-3 against Leeds, one heck of a comeback by Leeds as well. Ekitike scoring 2 goals. That's probably because I sold him in my fantasy Premier League team. And then, quick shout out to, in my opinion, one of the most underrated strikers, maybe of all times, but we'll see about that in the future. That's Harry Kane, another hat-trick for him, a goal-scoring machine. Then, we do have, unfortunately, Max Verstappen's 8th win of the season. The guy has the most wins, the most pole positions, and the most laps led of any other driver on the grid. But unfortunately, that was not enough for him to be world champion. Missed it by 2 points. So congratulations to Lando Norris and McLaren on a very good season all in all. Lando, you are world champion. So congratulations. It sucks for Max, but hey, I mean, he was over 100 points away from the first spot, and now he ends the season with 2 points away from the top spot, but the most wins. So I guess we'll take that. Next season, completely new car, completely new rules, no DRS. They're basically going to drive electric vehicles at this point, which again, sucks a little bit because you have Formula E. Why do you need Formula 1 being electric? Okay, it is what it is. Carbon neutral goals, despite all of them driving Lamborghini, Ferraris, Porsches, private jets, yachts, trucks, and you name it. But hey, optics, all about optics. Then we've had the World Cup. The World Cup draw. Belgium is going to play Iran at the SoFi Stadium. Coincidence? I think not. I'll probably have to do a specific poll or community post with some predictions, but do start making your predictions down in the comment section below, maybe with the semi-finalists, and then closer to the actual event, we'll maybe do something together. But yeah, that's basically it with regards to sports. Manchester United are yet to play, so I cannot make fun of them right now. And so all in all, that's about it for me in this episode. Quite a long one if I do say so myself, but probably the most important one. Basically realizing that, look, it's been an amazing year for me, and I think for a lot of you right now. Yes, we were up more a month or two ago. November was definitely not the greatest of months, but hey, I'm still up almost 60% year to date. Even if next year I'm going to be up only 30% or 20%, I don't think I'll complain. I'm happy with what I own. Some people think I'm owning garbage, but hey, I don't own Waste Management. So yeah, there is that. Anyways, that's all I've got for you today. Hope you enjoyed. Hope you had a great weekend. See you all in the next one. Bye-bye.